What if I told you that you can legally generate lakhs of rupees in cash by selling your old household belongings without paying income tax? Sounds unbelievable, right? But before you sell anything, you need to know the rules. Under the Income Tax Act, the sale of used personal effects, such as furniture, clothing, cars, and household electronics used for personal purposes, is generally not subject to capital gains tax. Because these items are excluded from the definition of capital assets under Section 214, if the transaction is purely personal and not a business activity, GST also generally does not apply. But there's an important catch. Under Section 269 ST, you cannot receive 2 lakh rupees or more in cash from one person in a single day for a single transaction or for one event. If the value exceeds this limit, always receive the payment through banking channels. Also remember, jewelry, paintings, sculptures, archaeological collections, and other works of art are not treated as personal effects. Their sale may attract capital gains tax. Likewise, if you're selling business assets or regularly trading such items, the income may become taxable.
PNJ helps you in sale of personal effect to properly claim exemption in income tax. Tax exempt personal effect. If the antique furniture was a functional part of your home, for example, a dining table, sofa, or bed that you or your family regularly used. Tax-free silver utensils and household items. If the silver items are utensils daily used by your family, such as silver plates, glasses, bowls, spoons, or puja thalis, under Section 214, these are considered personal effects. Based on historic judicial precedents like Sitadevi and Podar, selling household silver utensils is 100% exempt from capital gains tax. An antique wall clock used actively in your home is 100% exempt from income tax and capital gains tax under Section 140 of the Income Tax Act. Because it was physically hung on your wall and used as functional household furniture to tell time for your family, it legally qualifies as a personal effect. If you're depositing more than 10 lakh into your bank account, your bank may report the transaction under the Statement of Financial Transactions (SFT). That's why maintaining proper documentation is essential. Keep a detailed sale agreement, the buyer's PAN, photographs showing personal use, and records explaining how you acquired the item. Before selling any high-value personal effect, consult PNJ tax law solutions to structure the transaction correctly, preserve the necessary evidence, and confidently claim the exemption available under the Income Tax Act.